good morning, good evening, depending on where you are in the world. Welcome to this live training, 6 Secrets to Turning Your Recruitment or Search Business into a Profit Powerhouse. We're going to get started in just a few seconds, but before we do, just want to check the sound and visuals are working okay first. So you should be able to see me on screen here and Terry on screen as well. Terry, if you unmute and speak.
Good afternoon, good morning, and welcome to this webinar. Looking forward to this one, Drew.
Perfect. So if you can see us both, hang on, it's going to get the chat box up. Cool. So assume you can hear us okay. Just give us a hello in the chat box. Let us know that everything is working. And we're going to get started in just a few seconds. Terry, can you see the chat box?
What did you say, Drew?
So can you see the chat box?
Yeah, I can indeed, yeah. So Enrique in South Africa, good to hear from you and see you again. Hi, Barry. Hi, Paula. Hi, Frederick. Just confirm, is that Frederick in... where are you, Frederick? Where are you based? Could you tell me where you're based? I can't remember where you... Sorry, Frederick, I've just had a mental block. Where are you based, buddy? Oh, wow.
So if you're just coming in, I just want to check the sound and audio first. Should be able to see me and Terry, hear me and Terry as well. If you can, just give it a hello in the chat box. Let us know that everything is working okay.
That's right. In Portugal, in Portugal, but now in Amsterdam. I know exactly who you are. Be great to catch up with you sometime, buddy. Sorry about that, Frederick.
We're going to be covering 6 secrets to turning your recruitment or search business into a profit powerhouse. Awesome. Perfect. Look, so it looks like all the sound and audio is working. So let's dive right in. As we said, welcome to this session called 6 Secrets to Turning Your Recruitment or Search Business into a Profit Powerhouse. Just before, actually, no, I'll skip that bit. Actually, one of the reasons we wanted to put on this session is because I think we have obviously, so what's the date recording this? It's, we're in 2023. There's a talk of recessions. One of the biggest complaints that we get from recruitment and search business owners is that they feel like they're working really hard, spending a lot of hours in their business, but without really getting to see the reward. So even if the revenue is good, their profit isn't good, they're not able to pay themselves highly enough. And what we found is there are a few sort of tweaks that you can make in your business to make your business a lot more profitable, a lot more enjoyable, and really enjoy the fruits of your labor. So we're going to be going through the 6 of the things that some of our best clients do on a regular basis to help them do that. Again, just want to check in. Does that make sense? Give us a yes or no in the chat box. And Terry, anything you want to add to that?
No, just I'm looking forward to it. And Greg in Maine, USA, welcome. I'm glad you're all set and ready to go. So yeah, just let us know that this is all making sense. And we're going to share some content with you. I want to be I don't think you've shared, Drew. This is absolutely free. There's no cost. There's no obligation. This training is absolutely free. So I know some of you come along with your credit cards, wanted to give us money. Please put your credit cards away. We just want to give you some real content to help you generate more leads, make more placements, and grow your business. So this is really about making your business a lot more profitable than it is now. Some real simple things that you can do to do just that.
Perfect. So look, let's dive right in. 6 secrets turning your recruitment and search business into a powerhouse of profit. A few things we're going to go over today. So number 1, we're going to reveal the number 1 mistake stopping the vast majority of recruitment and search business owners generating as much profit as they would like, and how to fix it. For you, if you're making this mistake, it's something that's going to keep your personal earnings low. So we're going to show you, what that mistake is, but also what you can do to turn things around. Obviously, we're going to go through the 6 secrets with you as well. And we're going to be sharing with you why your revenue has nothing to do with your profit or how much money you can actually make on a personal basis as well. So let's dive right in. So the first of the 6 secrets, right? When we say secrets, these aren't things that are necessarily hidden or unknown. You may even be aware of some of these, but these are things that I think, from what we've seen, a lot of the recruitment and search business owners that we speak to neglect, right? So we speak to, probably hundreds of recruitment and search business owners a month from all over the world, Europe, North America, Africa, most English-speaking countries, actually. And we see sort of patterns in terms of the mistakes they're making in the ones who aren't doing as well as they want, but also patterns in terms of the ones who are doing really well, ones who have got the business that they want, patterns in terms of what they're doing right as well. So we're going to share with you some of the things that they're doing right. And again, some of these you might be doing already, some of them you won't be. What I would say is, for you to get the most out of this session today is grab a pen, grab a pencil, and take some notes down. And again, there's no point you coming here and just listening. As we go through it, decide what one you're going to implement on, or could be all 6, could be 1, could be 4, whatever. Decide what you're going to put into practice into your business going forward. Okay, someone check in. Does that make sense? Give me a yes or no in the chat box. And Terry, anything you want to add to that?
Yeah, first of all, I want to say hi to Carlos. Carlos, great to be speaking to you again in Canada. Really great to have you here. I hope your colleagues are joining us as well. And often you'll be tempted to think something along the lines of, this is everybody, by the way, not just you, Carlos. Yeah, I know that, or I know that. And I want you to be wary of that. We're always wary when people say to us, yeah, I know that. This isn't about what you know. This is about what you do. See, most people know, I don't know, you should drink 2 liters of water a day and exercise 5 days a week. Most people know that. We also know that obesity, certainly in the UK and USA, is growing, the percentage of people that are actually obese. And those people that are obese and overweight, it's not that they don't know, it's that they don't do. So it's really important that you kind of take this information, rather than going, yeah, I know that. It's what you do with the information. There's this myth about information knowledge is power. That's complete and utter BS. It's the implementation of the knowledge is where you get your power. So please, whatever you do, please make some notes and then implement these into business, because we're sharing with you what the most successful recruiters around the world are doing. If they can, why not you? Back to you, Drew.
100%. So the first of the 6 secrets, or first of the sort of 6 habits that I want you to take away from the session, is all about intent. So having the intent, and that intent's around, I think, everyone here, everyone listening to this, you've probably got a goal on what business revenue you want to generate, right? Probably at the start of the year, like we all do, we sit down and we set a goal around the revenue we want to generate, right? I don't think I can remember the last time. In fact, I don't think ever I've spoken to a recruitment search business owner who doesn't have some rough idea of what revenue they want to make, right? But when I say intent, or when we say intent, what we mean is, rather than just having a goal around the revenue, to make your business a profit powerhouse, you also need to have a goal or intent around the profitability of the business, right? So not just revenue, profitability of the business. So let's say you want to do £1 million in revenue. How profitable do you want to be? So one of the mistakes that we see, and again, it's a mistake that we've made as well, is that we sit down and we get really ambitious and we set these goals around revenue. And we sort of, the profit's a second thought, right? It's almost an afterthought, right? We set the goal around revenue. We work really hard throughout the year. We see what the revenue is, and then we look at, oh, well, how profitable have we been during that year, right? It's almost like rather than being the main focus, it's an afterthought, and we let it just happen. We let the profitability of the business just happen, rather than setting goals and targets around the profitability, right? So it takes sort of a mental shift, and as I said, it's a mistake that we've made as well. What we're seeing with the most profitable businesses in this industry and outside of it is they have a goal around profitability first before they have a goal around revenue. Again, someone check in, does that make sense? Give me a yes or no in the chat box. So a goal around profitability before they have a goal around revenue, right? So and again, I think it's not just in this industry. It's something you'll see from a lot of business owners, is that, if you've got friends who are business owners and you say, look, how's business going? They say, yeah, it's going really well. We turned over X this year, or we've got this many employees. Very rarely do you hear someone talking about how profitable they are, right? And again, it's only sort of over the years doing this that we sort of realize that, pretty much every day, right, we're speaking to businesses who have, let's say they've got £1 million, whatever turnover, but then they only have 5% profit, versus companies with 300k turnover, so solo companies with 300k turnover with 30% profit, right? So we can have a business that's doing 7 figures with only 5% profit, so 50k profit, versus a business that's doing 300k with 30% profit, right? Again, which business would you rather have? So the bigger your business gets, the more headaches you get, the more probably infrastructure you need, the more staff you need, the more problems you have as well. So if you're growing those problems blindly, you're growing that revenue blindly without thinking about profitability, what we do as a byproduct, we incur more problems with less actually money, right? So more money, more revenue, but more problems as well. Okay, so I want to check in. Does that make sense? Give me a yes or no in the chat box. And Terry, anything you want to add to that?
Yeah, and I'm sure we've all been there, whether it's in a bar, a dinner party, having a coffee with somebody, and you meet the recruitment search business owners. Drew rightly pointed out it, by the way, it's not just recruiters. I think it's universal for most small business owners. And their ego kicks in, and they're keen to tell you what their turnover is. And Greggy, by the way, that's a really good point. Don't confuse activity for accomplishment, 100%. So business owners, look, we talk to recruiters every day of the week, and they will say, yeah, we're doing 2 million. We're doing, one guy said to me the other day, he said to me, I don't know what you can tell us, Terry, I don't think you can teach us because we're doing 2 million a year. Quite frankly, so what? I'm working with solo recruiters that are doing 1 million a year. As it turned out, he employed 14 people. His business isn't that profitable, by the way. But the headline is, here I am doing 2 million. Or was he put it, how he worded it was, we're a multi-million pound recruitment business is what he actually said. That's his ego kicking in. He's doing 2 million, employing 14 people. Not much profit in that, by the way. Not much profit at all. And ultimately, you're in business to make profit and as much profit as possible. You're not in business to create this business with a massive turnover. And Drew gave that example. That's an insurance recruiter that does 1 million but makes 5% profit. What the hell? You could put all that money into a bank or build society now and then get about 3.5% return. You'd be probably better off doing that than all the hassle with a team with that kind of profit. So don't get caught up in that vanity about your turnover. You're in business to make profit and as much profit as possible. Yeah, good point, Frederick. Yeah, sanity metrics and vanity metrics. Yeah, 100%.
100%. So secret number 2 is to have the intent around profitability, not around revenue. Secret number 1, intent around profitability rather than revenue. Secret number 2 is to master the art of client attraction. So master the art of client attraction. Again, I think most people here, most recruiters will know the importance of being your ability to bring in clients, bring in business, bring in new business, right? That's obviously going to have a massive impact on your, not only just revenue, but your profitability as well. But the reason why I wanted to highlight this is because although most people we speak to are aware of that, it's very few recruiters who actually spend any time mastering the art of client attraction, right? Again, it's almost an afterthought, right? We're good at delivery. We're good at even sales a lot of the time. But how many meetings with potential hiring managers or potential clients that you booked this month? And what are you doing to improve that next month, right? When we ask that question, often the answer is nothing. I haven't really thought about it. I got 5 meetings this month. Some from referrals, some from XYZ. Haven't really thought about what I'm going to do to increase it next month, right? If we don't increase that, not only is revenue not going to increase, but obviously profitability isn't going to increase either. We want to get you to a point where you're so good at client attraction that we're able to out-market market conditions, right? Out-market market conditions. And what I mean by that is, regardless of what's going on in the economy, I think, it's safe to say that sometimes there's going to be more demand for your services than others, right? So forget what's going on in the economy at the moment or in the future or in the past. We know for certain that sometimes there's going to be more demand, sometimes there's going to be less demand for your services, right? That's a given. When I say out-market market conditions, what I mean by that is in the times where there's less demand for your services, let's say demand for your services drops by 10%, you want to have the ability to increase the number of clients you have by 20%, right? That way you always grow. So if you can beat the market conditions with your ability to attract clients, you'll always increase your revenue and obviously profitability as well. We want to build more demand for your services, more than you can handle. That way, we can start to turn away the business we don't want and handpick the most profitable clients, the roles that are easy to fill, the roles that pay the highest fee, the roles that are going to be most profitable to our business. Again, someone check in. Does that make sense? Give me a yes or no in the chat box. And Terry, anything you want to add to that?
Yeah, it's a story that I've shared before, but there's a story of 2 recruiters walking through the woods in Canada, and they're hiking. As they're walking through the woods, they can hear some noise in the background, and they turn, and there's a grizzly bear. So these 2 recruiters start running. But one recruiter stops, takes his rucksack off, and puts his trainers on, his running shoes on. And the other recruiter says, "You crazy, you'll never outrun that grizzly bear." And he says, "I don't have to outrun the grizzly bear. I just have to outrun you to survive." And it's exactly the same for you. You see, people think that if you're the best recruiter, you're going to be the most successful recruiter. There is no evidence of that whatsoever. all the evidence suggests it's the best recruitment company that's best at getting new business that will outperform any other recruiter. You can have the best candidates, you can have the best consultants, you can have the lowest fees. It counts for nothing if you can't acquire new clients. And as Drew rightly said, the amount of times we talk to recruiters and say, yeah, well, I'm on this PSL. You know what PSLs are like, Terry? We can't get the fees that we want, and we're thrown into a pot with other recruiters working on contingency. You need to acknowledge that's a choice that you've made. When you get really good at client attraction, you decide who you work with, when you work with them, and for how much. But that's your choice. Hell, it's your business. You should be making that choice, not the hiring manager.
Yep, 100%. Again, just want to check in. Does that make sense? Give us a yes or no in the chat box before we move on to number 3. Perfect. Awesome. So number 3, and again, this is more for you if you're, especially if you're a contingency recruiter right now, right? As the majority of the market is, and that is number 3 is to get paid for the work that you do, right? Get paid for the work that you do, and really what we're talking about here is your fill rate. So, simply put, right, we as recruiters, right, what we're doing is we're trading labor for money, right? So we're working to fill the roles, right? Like whether we know the candidates already, whether they're on a database, we're trading labor for money, right? So if you're a contingency recruiter, chances are that you're going to have your fill rate is going to be impacted by the type of clients that you signed, right? So again, the industry average is for every 10 roles that you get, perhaps you're filling 3 of them, which means for the other 7, you're working and not getting paid, right? So once you imagine that you're not a recruiter for a second, you're a window cleaner that only gets paid for 3 out of every 10 windows that you clean, right? Again, it's not very profitable, right? We're only actually making any revenue on 3 out of 10 of the work we do. Again, same with your fill rate. So what we want to do is, and again, what we're noticing with the most profitable businesses is that whether they're contingency retained or not, right? So you can increase your fill rate by going retained, but that's not the only way you can increase your fill rate. You can do it also by picking better clients or picking roles where you're more likely to fill them. But the higher your fill rate is, the more profitable your business will be, because you're actually getting paid for the work that you do, right? It's better if you're only filling 3 out of every 10 roles that you work. It'd be better to just work. You'd be more profitable just working 5 and filling 4, for example, right? Because because they're spending less time to get more revenue. Again, just want to check in. Does that make sense? Give me a yes or no in the chat box. And Terry, anything you want to add to that?
Yeah, this is always an interesting conversation, and Carlos, you'll relate to this. But often when we're talking to clients, there is this resistance of, yeah, but we've always done it this way, and we've always worked a contingency, and we've always not filled most of the roles that we've worked on. You really want to think seriously what's going on there. You're saying to clients, you give me 10 roles, but most of them I won't fill. The perception from the client is, the hiring manager is, well, most of the roles they're not going to fill anyway. From your point of view, you already know that you're not going to fill most of the roles. The most obvious thing is, why take them on? Here's what recruiters say. Yeah, well, we might fill it. We kind of hope that we do. Would you not be better to take on roles where you know that you're going to get paid for? There's nothing unreasonable with that. All you're saying to a hiring manager, I'll work on these roles, but can you pay me for that? And look, the hiring manager that says to you, look, we've got some job orders on our job board. If you know any candidates, send over the CVs. And then recruiters say to me, yeah, well, I've got this client, and that's not a client.
Yeah.
Unless the client's paid you, it's not a client. Yeah, and by the way, you haven't sold anything. If there's no money to exchange hands, you haven't sold anything. So sometimes contingency recruiters say to me, yeah, but when I talk to a hiring manager, I close 90% of those deals. Bullshit. You may get 90% of the time, you might get a job order, but since most of those roles you don't fill, you haven't closed anything other than the ones that you do fill. And you've got to be really careful about this. And full disclosure, when I first entered this side of the business, I had my own recruitment business and was a recruiter before that. I always worked retained, so I didn't realize that there were recruiters out there that worked for nothing. I had no idea. And it wasn't until I was coaching a recruiter, and he kept talking about, Terry, I'm really rushed now, I'm going to see a client. And then 4 months later, he said, Terry, I've got a real challenge with cash flow at the moment. I said, I don't understand. How have you got a challenge with cash flow? You have all these meetings with clients. He said, oh, yeah, but they've given the job orders. I haven't filled them yet. What the hell? They're not clients. I gave the example yesterday. I was talking to Carlos, who's on this call. It's a bit like if you've got a child and your child comes over to you and says this, I'm getting married. I've met this beautiful person. I'm going to get married in 6 months' time, hopefully in 6 months' time. But this person I'm going to marry is also dating 4 other people. And what they said to me is, whoever organizes the wedding first is the person I'm going to marry. As a parent, you'd say to them, that's not a relationship. Probably not a good idea. It's not serving you. And you just need to be aware of what's going on. All you're asking for is to work with somebody. You'll do the work and they pay you. You tell them which part of that is unreasonable, because that's all you're doing with a retained basis. You're just saying, I'll do the work, you pay me for the work that I do. No more, no less.
Yeah. Again, just want to check in. Does that make sense? Give us a yes or no in the chat box. And again, this is just to clarify, this isn't just about working on retainers, right? That's not what we're saying. Because yes, you can work. People that work retained tend to have typically have a higher fill rate, right? From people that we speak to, retained recruiters will fill 9 out of 10 or more of the roles they work, whereas typical contingency will fill 3 out of 10. But some of the things that affect a fill rate isn't just whether it's retained or contingency, right? It's also how many other firms, how many other agencies are working on that role already, right? Which again goes back to number 3, why you need to get better at marketing. Because if you're speaking to clients and yes, they're willing to give you the business, if you want to call it that, but or you ask them, they say, yeah, there's 10 other agencies working on this vacancy already. That's probably not a good client. They're ones where you probably want to avoid. Whereas if you know there's only one other recruiter working on it, again, you stand a lot better chance of filling that role. Even better if we can get it exclusive, right? So we're the only recruiter working on that role. We stand a lot higher chance of filling it. So there's lots of ways we can improve fill rate. But look at your fill rate right now. Again, it's another mistake people make, is they don't measure their fill rate, right? So measure your fill rate right now. Look at it. If it's the industry average, say, and it's 3 out of 10, increasing that to 6 out of 10, we would double your revenue, significantly increase your profitability without you having to hire any extra staff, build any extra infrastructure, any more software, right? Doing what you're already doing, right? You wouldn't have to do any more work, right? And all it takes is being, I guess, selective about what roles that you take, right? Rather than just thinking like, I'm just going to take on anything because I don't know where the money is going to come from. So I'm going to take on anything, work everything, and then sort of potluck whether I fill the role or not. Again, just want to check in. Does that make sense? Give us a yes or no in the chat box. And then move on. Again, if you've got any questions on this, let us know as well. Terry, I was going to put this question to you, right, from Frederick. He said, which terms would you suggest for a retained job? How much time do you search for the retained fee? How much time do you search for the retained fee, and how would you divide the fee?
Which terms? I'm not sure if I understand the best, but which terms? How much time do you search for the retained fee? I'm not sure. Let me answer it this way. Let's say you get a job order, and the salary is 100,000. We just keep it 100,000. And let's say typically our clients are charging between 28 and 35%. So let's make it easy. Our clients would typically charge about 30%. So the classic model is, on the retained model, is you get paid in three equal parts. A third upon authorization, so 10,000. A third upon presentation of acceptable shortlist, and then the balance upon offer and acceptance. I hope that answers your question. As you're getting paid for it, Frederick, what it means is, you say how much time did you give it? If you only win one retainer a month, every single month, and let's say it's at 30,000 a month, you're going to do over 300,000 a year. But you kind of know as well that you're going to be invoicing. Month 1, you're going to be invoicing 10,000. Month 2, you're going to be invoicing 20,000. That's before the candidate actually started and you're finishing those assignments. Let's say that on month 1, the assignment you got on month 1, they start in month 3. So month 3, and now you get one retainer, one shortlist fee, and one final fee. You're invoicing 30,000. So the advantage, I want to be clear, this isn't just about retainers. It does help massively with your cash flow when you know, when we win this business, we're going to get some cash up front for the work that we're going to do. And we're going to get some cash later on. So it eliminates that feast and famine that so many recruiters have, where one quarter the business is drinking champagne and eating caviar and smoking cigars, and the next quarter it's bread and water because they've got no cash coming in. And anybody that's worked in contingency would have experienced that. So I hope that answers your question, Frederick. If it doesn't, you've got my email address. My person, shoot me an email, and you know we can have the one-to-one to that. Yeah, I tell you what, Frederick, can we answer these? Because we're going to kind of digress, but I answer this question. Typically, it's 3 to 5 on the short list. Typically, on the actual short list as well. Yeah, but yeah, email me or jump on the call with me, Frederick, and make sure you join us for the call tomorrow. By the way, point number 4, is it, Drew? Increase your margins.
Yeah. We'll take that one or my?
Yeah, you lead then, Drew. Yeah.
Go. So number 4 is to increase your margins, right? So again, question for you two questions for you to think about, right? And again, it's a question that we ask a lot of the recruitment and search business owners we work with. Very rarely have we ever had an answer, right? Because this, again, it's an afterthought. So question number 1 is, do you know exactly how much it costs you to deliver on an assignment? Right. So do you know what the cost of labor is to fill an assignment, right? And the next question is, do you know the average time it takes for you to fill an assignment? And again, the reason these are 2 questions you need to know, because these are effectively the cost of your delivery. Again, I'm going to use the window cleaner as an example. If I'm going to start a window cleaning business, I need to know, how much the equipment is going to cost me, how much water is going to cost me, and how long it takes me to clean an average house. The reason you need to know this, right, is because if without knowing it, what we see happening is if you don't know your cost of delivery, you don't know what the minimum fee you should accept for the work you're doing should be, right? So sometimes what we've seen is, especially when the market gets a bit difficult, we see recruiters reducing their fee, but reducing it to the point where they're no longer profitable. So let's say it costs them £5,000 to fill an assignment. They reduce their fee to $4,000, for example. So they're actually making a loss on delivering that particular assignment. Again, if not that one assignment, because they're doing contingency with low fill rates, they're making a loss on across 10 assignments, right? We need to know what it costs to deliver on assignment. Also need to know what the average time it takes as well, because again, as you will know, not every role. Some roles are easier to fill than others. Sometimes it gets to a point where a role, especially if you work in contingency, by the way, if it's taken too long to fill a role, it gets to the point where it's no longer profitable. The longer it takes you to fill a role, the less profitable it is, right? If we could fill a role in one day, and get paid a 10K fee for one day's work effectively, that's obviously a lot more profitable than getting paid a 10K fee for 10 days work, right? Same fee, but it's taken us longer, because the longer it takes us, that's time away from other areas of the business. If we don't know what the average is or know what the max point is before this particular role or these set of roles become unprofitable, again, we end up working and eating into our profit massively. We need to be aware of this so we can make a decision, go to the client. And again, it doesn't happen often, but you need to be aware when it does happen. You can go to a client and say, look, Mr. Mrs. Client, we've done this search, but actually due to market conditions, due to X, Y, Z, we're unable to fulfill this role at this time, right? Because if you go any longer, it's going to be unprofitable. Again, just want to check in. Does that make sense? Give us a yes or no in the chat box. And the other point to this, so the reason why we know the cost is we also want to be working hard at increasing that margin, right? Getting the amount we're getting paid as far away from possible from the amount it's going to cost us. So if it's going to cost us 4K to run an assignment, and we're charging 5K, we want to try and raise it up to 6K, 7K, 8K, 10K, whatever what it is. And what we're finding is, no matter what market you're in, the cost of delivery pretty much stays the same. So, which is one of the big reasons why one of the things we're going to be working on is, looking at how can you increase your fee? How can you get paid more for the work you're currently doing, which make your margins bigger, make you more profitable? Again, so checking, does that make sense? Give us a yes or no in the chat box. And Terry, anything you want to add to that?
Yeah, there's a saying that I'm sure you've all heard before. If you can measure it, you can manage it. So let me just come to you, Carlos. Without sharing your numbers, you don't need to share your numbers with me, but I've got some idea what your numbers are. If you look at your fixed cost and you look at the number of placements you're making, that's how much per year, fixed cost per annum, and the number of placements you're making per annum. Then if you divide that, it will tell you how much it's costing to make each placement. So let's say, and I don't know what your figure is, well, I do, but let's say for you, your fixed cost per placement is 10,000. And this is really applicable to individuals if you've got a team. Sometimes consultants will take deals or do placements at less than your fixed cost. So from the consultant's point of view, as an employee, they go, I've just made a placement and it's worth 8,000. And they go, hurrah. However, for the business, there was a cost to that because your average cost per placement is 10,000. But from the consultant's point of view, this is not criticizing the consultant. It's 8,000. And by the way, most of them will then get paid on that 8,000 as well. So the cost can often increase from where it is normally. So it's imperative that you know your numbers. If you don't know your numbers, you've got real problems here. How much does it cost you to deliver on one assignment? Do you know how long it takes you to deliver on that assignment? Because again, as Drew pointed out, if it's taking you, let's say, 8 weeks to deliver one assignment, and in that 8 weeks, it costs you, and each placement costs you, I don't know, 10,000 or whatever, you're probably out of pocket. You need to be having the conversation with the hiring manager saying, there's no point of us working on this because it's not cost effective. Carlos, can you just let me know yes or no? Is that answering your question? Is this counter to your retained agreement? No, it's not, Carlos, because on a retained agreement, you get paid up front before you even start working.
I don't know. On a retained agreement is well. If it's not profitable, you
won't take it.
Yeah, you just won't take it. You just won't agree to it.
You wouldn't take it. Yeah.
More important on contingency, where you enter it not knowing how long it's going to take you to fill the role, not knowing whether or not you're going to get paid or not at all. That makes sense. Understood. Perfect.
Yeah, great. Thanks, Carlos. Yeah. Look, anybody got any questions on this, by the way? Yeah, please feel free to ask any question.
Awesome. So number 4 is increased margin. Number 5 is reduced non-profitable expenses. So reduced non-profitable expenses, which is probably one of the most basic ones, but there's some detail to this that I do want to clarify on this call. So look, obviously, your profitability is down to the revenue you bring in and your expenses. So what first thing we want to do is cut expenses that don't make you money or don't save you time, right? That should go without saying. Should be something that you do on a regular basis. I think, as business owners, you can, with subscriptions, we can just end up spending money and not really paying attention to where it's going, right? So the first thing you want to do is set a habit every month that you're looking at your expenses, looking at, what you still need, what's actually making you money and what's saving you time, right? And cutting back on anything you don't need. We also want to keep the expenses that are generating a profit, right? So sometimes, especially when the economy gets a bit hairy, people cut expenses blindly. We only want to cut the expenses that aren't profitable because sometimes the investment is required to generate the revenue in the first place, right? That's the first thing. I think the second sort of deeper part to this is that we want to cut expenses where even if they're technically making us money, we want to cut expenses where would be more profitable not having the expense at all. And what I mean by that is, let's say you operate at 25% profit in your business, right? And this is just an example number. So you put your numbers into this example to work out what it is for you, right? If you operate at 25% profit, that means for you to keep £1, so that's for you to have £1 in profit, or $1 or whatever, €1, you would need to make £4, right? So for every £4 that you make, or $4, you get to keep 1, right? So I want to check in first of all, does that make sense? Give us a yes or no in the chat box. So I want to make sure you understand that bit first before I move on. Yeah, if you're 25% profit, for every 4 that you make, you get to keep 1, right? That's your profit, right? So assuming that's the case, right? What it means is that you saving or you reducing your expenses by 1 is the same as you making 4, right? Because we still get to keep that 1, right? So sometimes it can look like it's we're just saving 25%, or just saving £1 or €1, but it's the equivalent of making 4. It has the same impact on our profitability as making 4. Again, so I want to check in. Does that make sense? First of all, give me a yes or no. If it's not, let me know so I can clarify further. Yeah. Perfect. That means, right, so again, sticking with this 25% profitability, that means if something isn't giving you a 4x return, sometimes you may be better off cutting the expense anyway, even if it's making you a 2x return. And the biggest time that we see this is with employees, with consultants, because sometimes we will hire a consultant, we'll hire a recruiter, and because we're breaking even with that recruiter, or because we're maybe getting a 2x return, we tell ourselves that you know what, we're getting a return on investment. You know, yeah, we're paying this recruiter X, but we're getting this back. When really you'd be better off when you consider the profitability of your business in the first place, consider the time that you have to put in training that recruiter, the expenses in terms of software, admin, whatever it is you need to do, you would be better off just getting rid of them in the first place, like even if they are, technically performing. And this is sometimes what we see happen. This is why we get a lot of overinflated businesses in this industry where they have 1 million, 2 million turnover, but with 10 employees, is because the employees are technically making money, but the business owner hasn't realized that they'd be better off just them being the solo recruiter, single biller, generating 300K on their own. Right? Again, someone check in. Does that make sense? Give us a yes or no in the chat box. And Terry, anything you want to add to that?
Yeah, I think it's so easy. And admittedly, we only talk to recruiters every day of the week, but I'm sure it's the same challenge for most business owners. And they say, yeah, I think a classic example is a software. So yeah, we've enrolled for this software or whatever. And you ask them the question, are you getting the return on investment on that? 90% of the time, they have no idea. If you've got no idea, you've got a problem, quite frankly, because you should know that, at the very least, know this is a profitable piece of software, as an example, that I'm making money on. Now, the other classic one is, yeah, I've got a consultant. How are they getting on? Well, we kind of break even with them. If you're just breaking even, you're actually losing money. If you look at the numbers, you're actually losing money. And I keep coming back to this. You are in business to make a profit. You're not in business to break even. You're in business to make a profit. With all the hassle that comes with running a business, quite frankly, if you're just breaking even, you're as well to go and work for somebody else as to go with all that hassle just to break even.
Yeah, so does that make sense? Give us a yes or no in the chat box, and if you've got any questions on that, let us know. Again, this is probably one of the biggest areas we see profitability disappear, because sometimes it's hard to see that getting a return on investment isn't the same as being as profitability could be, right? Because you need to be very tight on the numbers. Perfect. Awesome. So again, just to recap very quickly, we've got number one is intent, right? We want to have a goal for profitability, not just a goal for revenue, right? Having a goal for revenue means that we can build a business that has a high revenue, but the profitability becomes an afterthought, which is why we get so many businesses in this industry, and you'll see a lot of them on LinkedIn or wherever, talking about how much revenue they've got, how much employees they've got, but behind the scenes, and again, we speak to more of them than anyone else. Behind the scenes, the owner is having sleepless nights. They're stressed. They're not providing for the family because they're not able to take the profit they want out of the business, right? And again, this happens at businesses of all sizes. Get it right now. As you grow, you'll be a lot happier, a lot more freedom, a lot more security. Number two, you want to master the art of client attraction, right? You don't want it to be where your ability to attract clients is your weak area, right? For the vast majority of recruitment and search zones that we speak to, that's what I say. It's like, yeah, I'm okay with this, okay with that, but just bringing in clients. That's the one area I struggle. There's nothing wrong with struggling in that area. What is a crime? What is a problem? I think is not doing anything to fix it, not doing anything to work on it. Again, whatever you work at, you're going to improve. Working at client attraction gives you ability to outmarket market conditions, build up demand that's beyond that you can handle, so you can handpick the best and most profitable clients, the highest payers, the best payers, the assignments that are easiest to fill, right? Fill in quickest time to make them more profitable. Number three, get paid for the work that you do. Again, this is about increasing your fill rate, right? If you've got, so again, it's especially for contingency recruiters. If you're filling 3, 4 out of 10 roles, what can you do to boost that? Can I fill 5 out of 10? Can I fill 6 out of 10? Or even better, 9 out of 10, right? The better our fill rate is, we can generate more revenue, be significantly more profitable without any extra work, without any extra input from you. Number 4, increased margin. Again, this is about increasing, being aware of your cost of delivery, but also increasing how much we can charge for delivery as well, right? Doing those two things builds a lot more profitability, a lot more cushion. Number 5, reduce non-profitable expenses. That's the most, I guess, technical one and harder to get your head around. And then that moves on to number 6. Before we go into number 6, Terry, I just want to check in. Anything you want to add to any of those 5?
Not this stage, Drew. No, could cover them well.
Perfect. So number 6 is control speed of money. So control speed of money. Again, just to explain what we mean by this is really about cash flow. One of the So cousins of profitability is your ability to generate cash or cash flow in the business, right? Look, again, I think Terry, before we got on this call, Terry was speaking to a recruiter who had good revenue in their business, okay profitability, in fact, but their cash flow was holding them back from growth, right? They couldn't really invest in anything that's going to help them grow because their cash flow was poor. So having good cash flow is going to help you be more profitable as a byproduct, right? So check in, does that make sense? Give us a yes or no in the chat box. Perfect. And one of the sort of easiest or most impactful things you can do to increase cash flow is control or improve cash flow. Sorry, is to control the speed of money. So obviously, bringing more clients in is going to help you with your cash flow. But if your payment structure, again in terms of getting payments in and getting payments out, isn't set up properly, you're just going to really make that cash flow problem bigger. So what we want to do is speed up how quickly we can bring cash in. So Terry used the retainer example earlier, right? If we can start getting paid up front for the work that we're doing, obviously that's going to get the cash in the door quicker. If we can start getting paid on again, depending on what your payment terms are, let's say your payment terms are 60 days, if we can reduce that to 30 days or 7 days or 6 days, right? Whatever it is, we're going to get paid quicker. If we can get paid on offer and acceptance rather than start date, again, we want to delay the time it takes us from us winning the business to the cash hitting our bank account. Like the more we can delay that, the more that we can speed that up so it happens quicker, the bigger impact it's going to have on our cash flow. Again, someone check in, does that make sense? Give us a yes or no in the chat box. And Terry, anything you want to add to that?
Yeah, I just want to go into a bit more detail. So let's look at some of the payment terms. So often, and here's another one as well, is how you discount. So sometimes you're talking to a client, let's make it as simple as possible. Let's say you're talking to a client, the salary is 100,000. And you say, our fee is 25%. And the client says, can you knock a couple of, in fact, the client would say something like this, can you just take 5% off that? And can we call it 20%? Well, for the record, first and foremost, it's not 5%. So if you were charging, if it's 100,000, you normally charge 25,000 and you take 5,000 off, it's not 5%. So that's the first thing to make a point of. When the client asks for that, agree to take the percentage off the final fee, not the percentage itself. Does that make sense? So rather than saying, yeah, we normally charge 25%, but you want it for 20%, you say, yeah, I tell you what we'll do then. We'll take 5% off the final fee because it's a lot less, but you're giving them the 5% that that's for. That's the first point to make. In any negotiations, it should be win-win. So if the client's asking for discount, and you're prepared to do it, and I've got some mixed views on this, but let's say that you are prepared to do it, it should be on what we call a win-win. Can you give me some discount on that? I may be able to give you some discount if you agree to pay this invoice within 7 days. On the understanding that if you don't pay it within 7 days, then you don't get the discount. We'll put that back on. Does that seem reasonable? Often recruiters will just give the discount away. Or here's another one that recruiters say. They say, we normally charge, and then give their percentage. You opened yourself up. That's like going into a boxing ring and sticking your chin out going, here we go, have a go at that. We normally charge. Look the client in the eye and say, our fees are 33%. Not we normally charge. And the big one for me, most recruiters do this. On month 1, they start working on that assignment. By month 2, they've got the candidate in for interviews. Month 3, the candidate hands a notice in. They're on 1 month's notice. Month 4, the candidate actually starts. Month 5, if you're lucky, you get paid. But you did the work in month 1. Crazy. Here's what our clients would do. Month 1, they get a retainer. Month 2, they get a shortlist fee. Client makes the offer in month 3. Terms clearly state balance is payable upon offer and acceptance. You've done the work. You did the work back in month 1. Why would you have to wait until month 5 before you get paid? Yeah. So many recruiters we talk to, they have this problem with cash flow. They say, well, business is okay if I can just get the cash in. Listen, I'll be clear about this. I'm a former search firm owner, and I know what it's like. I've had the sleepless nights when you're thinking, how the hell am I going to either make payroll or pay taxes? Because you're waiting for clients to pay your bills. because the client's dictating when they're going to pay you. What the hell? One of our mantras is you should decide who you work with, when you work with them, and how much they pay you. Because the moment you do that, you're doing what's best for you, your business, and your family. If you're giving that control to the hiring manager, to the organization that you're working for, they probably haven't got your best intentions at heart. You should be making that decision, not the hiring manager. Now, somebody said earlier, it's not easy. Of course it's not easy. If it was easy, everybody would be doing it. So no, it's not easy. We're not standing here saying, yeah, this is dead easy. But it is your choice at the end of the day. And only you can decide what to do. Because here's the thing. If other recruiters are doing that right now, why not you? I get you may not know how to do it yet, but if other recruiters are doing it, why not you? And the other thing is, I just want to, Drew didn't touch on this, but I think it's really important about cash and getting cash in. Your fees. There is this perception that clients buy on price and price alone. BS. They don't buy on price. There are other factors that come into it as well. And the majority of recruiters that we talk to, we always ask this question: are there other recruiters out there in your market charging less than you? Yes, there are. Are there recruiters out there charging more than you? Yes, there are. Well, if you're the mid-range recruiter, what strategic advantage is that to you? You're not the cheapest. Why be in the middle? If clients are buying on price alone, there is no logic to that whatsoever. It's well worth looking at that. Back to you, Drew.
No, yeah, 100%. Sorry, Terry, there's a question here from Tony. It says, can you say the third or final third part of the retainer? You know,
can you say?
That's what
I don't know.
Yeah, Tony, can you sort of reword that question? Because I wasn't sure what it meant either.
Can you say? Yeah, just let me know what you mean by that, Tony.
So yeah, look, some good examples of speeding up the cash in, and on the other side of the coin, we've got, we want to slow down outgoing payments, right? So again, anywhere you can, and again, it's going to depend on your business, but it could be commissions, could be software, could be anything, anything you're paying out. We want to slow down that payment, because if we can get cash in fast, but then slow down the outgoing payments, again, it's going to have a really big impact on cash flow. So that cash is in your bank account for longer, which means you can do more with it, right? You can invest in, other things that are going to help grow the business, going to help make you more profitable. Again, let me know if that makes sense. Give us a yes or no in the chat box. And any questions, let me know as well. Yeah,
Tony, if you wouldn't mind just rewording that question, because I don't quite understand it. Can you say the third or final third part of the retainer? Sorry. Said you get 1/3 for the authorization of invoice, another third for the shortlist, and the final third. Oh, sorry, for offer and acceptance. So once the client's made the offer to the candidate and the candidate's given a written acceptance, you've done your job. You raise your invoice. Can you just let me know, yes or no, Tony, if that answers your question? I think it does, but just type your Y or N in the chat there to let me know if that answers your question.
Sure, this is
Thank you.
Yeah, that's great.
Short listener. Yeah.
Yeah. Again, for anyone else who has any questions on this or any other parts, right, we're going to wrap up now. 10-2. If you go to makemoreplacements.com/start, what we can do is we can get one of our advisors to sit down with you on the phone or over Zoom and talk about each of these ideas, how they would present themselves in your business. So that's makemoreplacements.com/start. Go there, book a call, and we can run through them all with you.
Yeah, Frederick, as you're a client, just to let you know, you can email me and we'll sit down with you and answer your questions, and we'll give you the terms of business and everything. We'll do that for you as our client. So we'll help you with all that. That's all in the members area. So yeah, if you want to jump on the call, I can show you where everything is and get hold of that ASAP.
Awesome.
Cool. Yeah.
Perfect. So if there's no questions, we're going to wrap up. Again, remember to go to makemoreplacements.com/start. Carlos, to answer that question, best if you go to makemoreplacements.com/start, if it's right for you, we can go over that with you there.
Yeah, and Carlos, just so you know, Drew, I spoke to Carlos yesterday. So yeah, I've sent you some information, Carlos. So I can send you a link. You can book a call, and we can go over that with you next week. I'll be on the call tomorrow. So yeah, great. By the way, just to let you know, Frederick, there's one of our clients is going to share how he gets 40, 50 appointments a month without picking up the phone. So yeah, well worth joining us for that call tomorrow. He's a master at getting appointments with hiring managers at C-level as well, C-level executive appointments. So yeah, come and join us on that one. Yeah, awesome.
Awesome. All right, take care, guys. We will speak with you again soon.
Until next time, folks, take care, take action, be relentless. Cheers, folks.